We're here today in Hyde Park, sat by the Serpentine. Welcome to my office for the day with David Liddle from mortgage broker Liddle Perrett. David, welcome to my office. We're here for a reason. Tell me about the Serpentine and why it's important.
I swim in here regularly, about 4 times a week. It's a little warmer than it normally is this time of year. At the minute it's about 11 degrees, which is a good bit warmer than anticipated, but it's good.
And no conversation about the Serpentine would be complete without mentioning the red swimwear, would they? The red Speedos.
Or this season it's mostly blue.
Right.
I've got pink as well, but mostly blue.
Fair enough. We won't be taking a closer look at those today, will we? We're going to have a chat about mortgages and mortgage brokerage and what have you. So we've got a bunch of questions here to run through and get some information to share with people who are looking at mortgages and protection and what have you. So first of all, your website says clients are at the heart of everything we do. So how do you make that a reality for them?
First of all, being personable and accessible. I think attention to detail is incredibly important. When that person disappears with the tray.
This is live, folks.
Right, answer that question again. Right, so attention to detail and being present for the questions. I think a lot of the time clients don't actually know the questions that they're meant to be asking or answering. So a lot of it is guiding people to make sure that the right questions are asked, to get the right results, to get them what they want for them, what's right for them.
And do you think that's becoming more important the more things become complicated, the more tax increases and, you know, the more complicated mortgage applications become?
Well, there's the rules, there's the published rules and criteria, and then there's the unpublished rules and criteria, which I would hope is kind of common sense, but it isn't all. Well, I say regularly, don't apply common sense to any of this. The attention to detail is about ensuring that you get what you want first time round rather than having multiple failed applications. And a lot of the time the answer that is required to get through underwriting criteria may not necessarily be what you think it is. So a lot of that is asking the right questions to understand how best to apply for an application for a client.
And I guess part of that that care with your clients is going to be around rising interest rates and tightening affordability rules. How's that changed the conversations that you're having?
So the affordability rules have changed over the last years, obviously as interest rates have risen. They're now starting to loosen slightly, but essentially it's attention to detail. The difference between getting the figures right and bang on can be the difference between something working or not. It could be the difference between a first-time buyer getting that little bit of an income stretch to make what they want work, or it could be the difference between a rental income working on a property or not. And then the resulting difference in the interest rate. So it's really important to get it right.
And you just alluded to the sort of range of services, whether residential or buy-to-let. How do you, within your team, kind of balance the sort of breadth of service that you provide with the expertise that you need to have in order to deliver that service?
So as a team, we kind of spread the love between us, essentially. There is very little that we can't do. We deal with everything from first-time buyers all the way through to people moving houses, buy-to-lets, limited company buy-to-lets, all the way up to equity release and lending into retirement. So our ideal clients tend to be families. We tend to have, obviously everything is referral-based with us. So it tends to be, something's falling on my head. It tends to be family referrals who are all interconnected in some way, shape or form.
And you mentioned equity release, which is obviously growing in popularity. There's a long history of myths and mistruths. What are the biggest myths and misunderstandings that you encounter, and how do you kind of address those?
I think the biggest myth with regards to equity release is that it's a rip-off. People seem to be frightened but not necessarily know why. And a lot of that is lack of understanding and lack of education as to what the product's actually there for. Equity release is there principally to release equity from people's homes later in life for whatever you want to do, whether it's to provide an income, to do property up, to invest in property, whatever it is. But it needs to be for the right reasons, for the right circumstances.
And Liddle Perrett's a member of the Equity Release Council. What does that actually mean in real terms for your clients?
So essentially, there's a variety of standards that are put in place to ensure best advice. So it's mainly about being as up to date as we possibly can be with current products and procedure, and also being as up to date as we possibly can be with regards to how best to take advantage of what's out there in the market for the client.
And you've talked about how you sort of help the client to find the right product. Are there any kind of specifics that you'd sort of discuss with a client who's thinking about equity release, especially when the family's involved or inheritance factors might be involved, and how do you kind of address those sorts of things? Because obviously there's a reasonable length of time that somebody's going to have this kind of borrowing.
Involve the family. Whether it's first-time buyers or all the way through to equity release, I think family will always have an opinion in these things, and I think it's important to include them. If you have an elderly person or somebody who's into doing later life lending, I think it's incredibly helpful for everybody to involve their beneficiaries, whether that's sons, daughters, whoever that is. I think information and education, being open with information, is incredibly helpful. It allows people to then make the right decisions.
And moving on to another product that seems to be rising in popularity at the moment, bridging finance. Can be a really good short-term tool, but comes with risks, as does any mortgage. How do you manage that kind of client expectations with bridging mortgages? And similar questions really, how do you advise and talk to your clients, make sure that they're making the right decisions for them?
It's attention to detail. It's asking the right questions. With bridging finance, bridging's great for the right reasons, but bridging should only ever be gone into if you have a relevant exit, which could be sale, it could be refinance, if you're looking to retain a property. But the main thing is to have the exit really clear. What you'll find is a lot of bridging lenders won't actually lend without a clear exit, and there is some who may charge more, who will ask less questions, who won't be so concerned about the exit, but the bottom line is they still want to be repaid. So whatever happens and whatever you're doing, when you enter into a bridge, you should have the exit in mind, and ideally the exit in hand at the same time as you apply for the bridge, so that it's costing the minimum amount of money to do that transaction.
And I guess take professional advice.
Yeah, it's so when you say professional advice, it's making sure that has the client had the right accountancy advice? Have they had the right legal advice to make sure what they're doing is actually works? And sense checking their build schedule. So if they are doing something and there's a build program involved, making sure that is actually realistic and works.
And final question before we move on to buy to let. So looking ahead, what do you see as the sort of challenges facing the residential mortgage market for the next, let's say, couple of years?
I think the market, the marketplace overall has tightened up massively. It's all very well being able to go online and find out who's got the best rates using Compare the Market or Money Supermarket, whatever. What they don't do is they don't tell you what the lending criteria is and how lenders are actually looking at how things work, how a client manages their finance, how property portfolios are run. If the client's got complex income, for example, they don't explain that. So I think that we're going to, however, AI is going to be a big thing in the industry. It will automate lots of things, definitely, but it's not going to take away the need for human beings to understand what people really want and understand the right questions to ask.
Buy-to-let market's seen big changes in recent years, tax reform, rising interest rates and so on. What are the biggest challenges that landlords face right now?
The biggest challenge is having everything up to date. the best placed landlord is going to be somebody who's prepared, who has all their documentation in line, who's got their accounts up to date, has got their tax affairs up to date, and is in a position to understand the difference between looking at a scenario from a legal perspective or an accounting perspective or a lending perspective, because what's good for accounting isn't always necessarily good for lending. So the key thing is to work collaboratively with a client's accountant and solicitor to get the best outcome for that scenario. And that's not always as easy as it sounds, because not everybody has the the open-minded approach to things. And also a lot of accountants won't actually get involved in a strategic tax conversation.
So professional advice and the right team
Correct.
around the landlord.
Yeah.
And how would you help your clients to navigate tighter lending criteria and make sure that the stress tests that they need to carry out are actually done, accurate and credible for the lender?
So being realistic is incredibly important. It's very clear that surveyors are generally slightly more conservative, shall we say. However, their duty of care is to the lender to make sure that the people aren't overextending themselves and make sure the lending is correct and appropriate. I think the most important thing is to be realistic with what you're putting on a mortgage application, because just because they may be getting a rent of £2,000 a month doesn't necessarily mean they will if that property becomes vacant. So it's about ensuring that the applications that go in are correct and done in the best interest of the client to get what they want.
And the market's obviously changing. We've seen, or we're seeing, accidental landlords beginning to sell property.
Yep.
The Renters Reform Bill coming through now, and changes to the way tax is or may be collected in the future. I mean, what trends are you seeing among professional landlords and property investors?
I think they're all spending a lot more time to pay attention to the nuances of. It's not just a case of let's go and buy a house. It's more to do with are we using the right legal structure? Do we have the right shareholding for estate planning purposes? Is our accounting being done in a way to automate things moving forward so that things are easier? It's about running it as properly as a business now, as opposed to just sitting having a side hustle as a buy-to-let. And with all the new rules and regulations, it's incredibly important to have somebody on hand, a decent lettings agent, for example, who will tell you, what to do and how to do it, and make sure that your back's covered with regards to fire regulations and electrical regulations and all that stuff. All of these things can cost a pretty penny if it's not done properly. But you need someone who's up to date, bang up to date with all these things to tell you, and then you pull all these things together and you build a proper business model.
So the kind of the team around a landlord.
Yeah, team
now
is
has
everything.
And moving on, we spoke about bridging finance earlier on for residential mortgages. Plays a role in buy-to-let and commercial. How is it kind of, how does it work into property investment, and what are the kind of risks with it that people need to be aware of, and how do you tackle those things?
So people investing into property need to have a strategy. So whatever that strategy is, whether it's buy, rent, refurbish, whether it's buy a vanilla buy-to-let that's already in place to go and rent, whether it's buying something that you're going to tart up slightly and then rent it out and then refinance, whatever. There's got to be a strategy. So if you're using bridging finance to purchase, there's got to be a reason to do that. So are you adding sufficient value to that property to effectively warrant the additional cost of a bridge? If you are, happy days, that's great. You then need to work out what's the exit route. So are you going to be adding significant value to that property to warrant the increase in value? Because you don't want to get pinned with a 6-month rule, whereby mortgage lenders will typically value a property at the price at which you paid for it if you're trying to refinance within 6 months, and that's simply to avoid money laundering or to prevent money laundering, ideally. So it's about looking at the exit route, making sure it values up realistically, making sure that it is going to be lendable. So, for example, can that client get a buy-to-let mortgage if that's the exit, and making sure everything stacks. If it does stack, fantastic, great. If it doesn't stack, does the client have alternative avenues to get themselves out of that bridge? Now that could be sale, it could be pulling out money from another property. Is there a secondary way for them to make sure that is as safe and secure as it possibly can be?
And what are the benefits? I mean, why would you use bridging finance over, say, a more conventional buy-to-let mortgage?
Bridging is normally used for a number of different reasons. First of all, speed of completion. If you were buying at an auction, for example, then a bridging provider can complete in 3 days, pretty reliably. If you were looking at buying something that was unmortgageable in dilapidated state, you could use, that's another valid reason for using a bridging provider. If you were looking at something that you were going to add value to, so you wanted to extend and then refinance quickly, typically it'd be cheaper to do bridging finance and then refinance onto standard lending in that way. So bridging is there to help you add value or to move incredibly quickly. It's there when standard mortgage lending criteria may not necessarily be met, but there needs to be obviously an exit route. You can't be sat on bridging rates for the next 2 years. That's ridiculous.
And finally, what do you see as the outlook for the buy-to-let sector over let's say the next few years, and how's Liddle preparing to meet the demand?
So the buy-to-let marketplace, I think is going to become criteria. I think it's going to become slightly harder. There's definitely a drive to move everybody to limited company lending, and I think that's a number of reasons. First of all, is reporting to HMRC. Secondly, is making sure that everything is professional, making sure that all the rules and regulations are followed properly, making sure that people are running things as a professional landlord. That makes a big difference. Side by side with that, you've got a lot of the lenders who are stepping up to understand and help educate the sector with regards to how to run things properly and how to do things correctly with regards to everything from the rules and regulations with regards to construction to the ongoing management, making sure it's all done properly. And what we'll find moving forward is it will probably become more specialist. We already have a significant separation between kind of the high street residential and the more specialist buy-to-let side of things. And I think that's a good thing overall for the industry. I think it's helping landlords step up and run things properly. And it's helping split the industry really, because your average residential kind of one up, one down, kind of run-of-the-mill lending is very, very different to the more specialist buy-to-let stuff.
I think we're about to lose the weather. I think we might get rained on in the next few minutes. So the joys of having an outdoor office for the day. So David Liddle, thank you very much.
You're welcome.